Hello, and thank you for joining us here on the Clarity Core. Today we'll be exploring the topic New HSA Explained, the 5 highest tax states in the U.S., and how to pay less legally. Most people never realize how much of their life is controlled by one invisible force. Taxes. Not just the taxes you see, but the taxes you don't notice. The taxes baked into your paycheck, your rent, your gas, your shopping, your future. 2 people can earn the exact same amount of money, live the same lifestyle, have the same job, and yet one of them ends up significantly poorer. Not because they earned less, but because of where they live. In America, state taxes can decide how fast you build wealth, how hard it is to save, how long it takes to retire, and some states quietly take more from you than others. In this video, you'll discover the 5 states with the highest taxes in the United States, why these states are so expensive financially, and most importantly, how to legally optimize your taxes if you live there. This is not about politics. This is about freedom, financial clarity, financial survival, financial intelligence. Let's begin. Most people think only about federal taxes, but in reality, state and local taxes can be just as powerful, sometimes even more painful. State taxes affect how much of your paycheck you keep, how expensive it is to own property, how much you pay when you buy basic items, how costly your retirement becomes. Some states tax income heavily. Others rely on high property taxes. Some are aggressive at both. And the people living inside these systems often never realize how much they are losing. So let's talk about the 5 highest tax states in America. Not emotionally, but mathematically. 1. California. The tax titan. California is often ranked as the most financially aggressive state in America when it comes to taxes. And the reason is simple. California taxes everything. High income taxes, high sales taxes, high gas taxes, high business taxes. If you make serious money in California, the state will take a serious share. Why California taxes are so high? California runs one of the largest government budgets in the world. They fund massive public employee pensions, social programs, infrastructure, housing initiatives, environmental regulations. All of that needs money, and that money comes from you. The reality for residents high earners in California can face total tax rates approaching 50% when federal and state taxes are combined. That means you work for 2 days, and you only get paid for 1. How to optimize your taxes in California. If you live in California, you don't have to accept financial defeat. Here are legal strategies. Maximize tax-advantaged accounts, 401k, Roth IRA, HSA. Use itemized deductions instead of standard deductions. Consider business entity structures, LLC plus S-Corp election. Use tax loss harvesting in investment accounts. If possible, consider moving to a lower tax county. The most powerful move isn't complaining, it's planning. 2. New York, the silent wealth drainer. New York isn't just expensive, it's strategically expensive. New York State and New York City both impose taxes, which means residents deal with layered taxation. State taxes, city taxes, property taxes, sales taxes. It stacks. Why New York takes so much? New York funds. Massive public transportation systems. City infrastructure. Public housing. Social services. Statewide government operations. The cost of running the largest city in America is enormous, and it shows up in your paycheck. The true impact high earners in New York can face combined tax rates of 45% or more. This is why many finance professionals quietly move out after building wealth. How to optimize your taxes in New York. If moving isn't an option, smart strategy is max out pre-tax retirement contributions. Use commuter benefit programs. Contribute to 5 and 29 education plans for state tax deductions. Consider part-year residency strategies if you travel often. Use real estate tax deductions strategically. Knowledge here isn't optional. It's survival. 3. New Jersey, the property tax capital. New Jersey is not always famous for income tax, but it is famous for one thing: extremely high property taxes. If you own a home here, the government is your silent business partner. Why property taxes are so high? New Jersey funds most of its schools through local property taxes. That means homeowners carry the burden. Even if your mortgage is paid off, your taxes never stop. The reality. Many New Jersey homeowners pay $10,000 to $20,000 per year in property taxes. That's money you never get back. No equity, no appreciation, just a permanent expense. How to optimize in New Jersey. Challenge your property's tax assessment. Look for homestead and senior deductions. Consider multifamily investment structures. Use deductions strategically if itemizing. Consider relocation just one county over. Smart homeowners treat property taxes as negotiable, not fixed. 4. Illinois, where everything is taxed. Twice Illinois hits from multiple angles: state income tax, high sales tax, aggressive property tax. While the income tax may seem flat, the real burden is on homeowners. Why Illinois is expensive: large pension liabilities, debt service, urban infrastructure, government overhead. Someone has to pay. And usually that's middle to upper income earners. Sales tax reality. In some Illinois cities, sales tax can exceed 10%. That means every purchase is more expensive. Every lifestyle choice is taxed. How to optimize in Illinois. Shift income into tax-deferred vehicles. Purchase property strategically outside high-tax counties. Use business expense deductions wisely. Consider charitable giving strategies. Invest through tax-efficient ETFs rather than high-turnover funds. In Illinois, efficiency matters. 5. Hawaii, the cost of paradise. Hawaii might look like a dream, but financially, it's one of the most expensive states to live in. Hawaii has high income taxes, high general excise taxes, similar to sales tax, high cost of living, high housing costs. Why Hawaii is so heavily taxed. Isolation, shipping costs, tourism infrastructure, limited land. Everything costs more, including government. The tax effect. Even moderate earners feel the squeeze, and the combination of costs makes savings extremely difficult. How to optimize in Hawaii. Use every possible retirement contribution. Consider remote income sources tied to lower tax states. Use small business deductions. Take advantage of homeowner credits. Optimize healthcare and insurance deductions. Living in paradise requires structure, not just income. How wealthy people survive. High-tax states. The rich don't fight the system emotionally. They adapt strategically. Here's what they do. They use legal shelters: 401k, Roth, IRA, HSA, 529 plans, trust structures, LLC, and S-corp structures. These aren't loopholes. They're legal frameworks. They control their income types. They shift income toward long-term capital gains, qualified dividends, business income, real estate depreciation. Not all dollars are taxed equally. They use geographic strategy. Some work remotely. Some split residency. Some time their moves by tax calendar years. Your address can change your future. How to build a personal tax optimization system. Here's a simple framework. Step 1. Understand your state's reality. Look at income tax rate, sales tax, property tax, hidden local taxes. You can't optimize what you don't understand. Step 2. Reduce taxable income. First, maximize 401k. Traditional IRA, HSA, business expenses. Step 3. Build tax-efficient investments. Use index ETFs, long-term holdings, Roth-based strategies. Step 4. Control lifestyle taxes. Choose lower property tax regions, tax-free shopping timing, energy-efficient homes, tax-advantaged benefits. Taxes live everywhere, even in your habits. The psychological truth about taxes. Most people try to earn more, but never adjust their structure so they make more. But keep the same percentage. That's working harder for the same outcome. The goal is not to avoid taxes. The goal is to control how much power taxes have over your life. Final thoughts. The 5 highest tax states in America don't just take more money. They require more intelligence, more planning, more awareness, more strategy. You don't need to hate the system. You don't need to fear it. You need to master it. Because wealth is not just built by what you earn. It's built by what you get to keep. If this video helped you understand how state taxes affect your future, make sure to like, subscribe, and turn on notifications. This is the Clarity Core, where financial clarity turns into real-world power.